Today we had the CPI data report and the stock market did not crash. While that may be surprising to some, this is still a very bullish setup and the chart is still in a very powerful bull trend. So first up, let's take a look at the SP500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so just a quick look at the weekly chart. You can see we're still above the breakout level at SPY 407. So it's important to remember you can stay bullish as long as we're above this weekly breakout, because this is a weekly bull trend of higher lows and higher highs that does send us to higher prices by March. Now there's a lot of fear and uncertainty going around the market, and it's very important to follow the chart and stay objective in your trading, because you cannot trade on fear. You have to have a trade plan that is based on following price action. If you're looking for a trading community, I have the Stocks Channel Trading Discord community, which is absolutely crushing this market, and we strictly trade on price action. We don't guess where the market's going, and even though we have our predictions, we always let the price action do all the talking. I also have Bank Trade Alerts, which is also crushing this market, and that only trades TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. So if you're looking for help in this market and you're needing help blocking out the noise and just strictly following a trade plan, I do have those services that could be a great help to you, and you can find out how to join those by clicking on the links in the description of this video. Moving over to the daily chart of SPY, you can see we're still stuck in this critical trading range, which is going to be between the support trend line and that resistance at SPY 414. Now do pay attention, we are going up on increasing volume, and there was a lot of buyers near this support, which is down here right around SPY 407 to 408. And anytime you start to see higher volume buying, that does tell you there are people eager to get into the market. Now, one thing about volume is the bulls do not need high volume to go higher. You strictly need no sellers in the market. So there's this common misconception that bulls need volume to go higher, but it is only the bears that need volume. Typically speaking, the market is trying to go higher, and if you just zoom out on a chart of SPY, it's very obvious that it's a permeable ETF that goes higher. So if you want the ETF to go lower, you're going to need highly motivated sellers that are willing to sell at lower and lower prices, but buyers generally do not need high volume as long as there is no high volume selling. So when you do see high volume buying, that is very telling, because it tells you that buyers are eager to get into the market and they don't want to miss out on the next rally. So the fact that we're starting to see volume ticking up as we approach support today is a very good sign the market is trying to break out. That goes hand in hand with our weekly chart that says we're trying to get to SPY 420s. So I do expect to see SPY resistance breaking over the coming days and coming weeks. So watch that critical resistance breakout at 414, and you can stay bullish as long as we're above the support trend line. So you can use any risk level between SPY 404 all the way up to SPY 408. You manage your own risk and you decide how much risk you're willing to take. But as long as we have this bull trend, it is very likely that SPY is trending higher. On the NASDAQ 100 triple Qs, we were up 0.74% today, and we did get the bull breakout above the resistance trend line, and it's a lot easier to see that on the hourly chart. And again, we did get the breakout on increasing volume, so there are very motivated buyers. Another thing I want you to pay attention to is if you take the closing price from FOMC, we are still not letting those trapped bears exit their short positions. We just had CPI data and the bears continue to say we're going to crash, but we just continue to climb the wall of worry. So you can be objective and follow price action, or you could be on the side that is not following the chart that continues to lose money. This is very clearly a bull trend with very clearly high volume buying breaking out of resistance, which means we're well on our way into the 320s. On the way to the 320s, you still need to look for a resistance between 311 and 313, but once we clear that, it should be blue skies higher to at least fill the gap at 322. You can stay bullish above these risk levels below right around 300, and we do have the rising 20 daily moving average, which is also going to support the buyers. Now another thing, if I throw on the moving averages in the Bollinger Bands, you can see that we are above all of the moving averages and we have a ton of room in the upper Bollinger Band, so it's very likely the bulls are going to continue pushing higher. Also, don't forget this is a giant double bottom off of 260 as long as we're above the neckline breakout at 294, so you can also use the risk level at 294 for the higher price target at 327. So again, if you're staying objective, it's very difficult to see anything bearish on this chart. And if you're still thinking the market is bearish, you are not being objective unless you have something you can see that is not in the chart that I'm totally looking over. Go ahead and comment on it down below and I'll take a look at it. But from what I can tell, this is bullish price action with a very strong bull trend. And when we get to the VIX, you are going to see the VIX took a dirt nap today. On the Dow Jones, we were down 0.41% today, but again, the price action is looking like it's breaking out of a bull flag, and we are still having the price action above all of the moving averages with the bull trend. So the Dow Jones above this breakout around 339 is still looking like it's trying to climb higher into the 350s. If this does turn out to be a false breakout, we could still come back to 334, but again, this looks like a confirmed breakout because we now have consecutive days in a row closing above all of the moving averages and outside the breakout of the triangle. On the Russell 2000 IWM ETF, we were down 0.05% today, and we are back over all of the moving averages for the second day in a row, and we're starting to break out above the resistance trend line. So from here, this could have been the pullback before the next leg higher that takes us into the 200s. Look for upside resistance around 195 and 198, and if we clear all of that resistance, we can easily start marching higher towards 203. Your risk level as a bull is down here around the neckline breakout at 188, and if we lose that support, we could come back down towards the gap fill at 181. On the ARKK ETF, we were up 2.51%, and the price action is back over all of the moving averages, and we're very close to getting a bullish crossover of the 20 daily moving average back over the 200 daily moving average. So you can stay bullish as long as we're above this support between 38 and 39. If we lose that support, we could come back down towards 35. So manage your risk around that support and look for the next upside resistance around 41.7. And then above that, we can start marching higher towards 44 and 45. On the VIX, we were down 6.94% today, and the VIX got absolutely obliterated today. And not only did it crush back down below 20, it also crushed down below 19. So I continue to tell you the VIX this low is telling us there is nearly no fear left in the market, and these bull trends continue to get stronger as the VIX continues to go lower. So remember, we're only looking for a volatile correction or a continuation of the bear market if the VIX continues to spike above 20. And the last time the VIX tried to spike above 20, it got absolutely obliterated and crushed back down below 19. On Bitcoin, we're currently up about 2%, and Bitcoin is getting the bounce off of the support, which is the neckline breakout around 21,300, and we're back up towards the resistance around 22,400. Overall, I think Bitcoin is a bullish hold for the long term that could take us out to 2025 as long as it's above the 200 daily moving average. You can stay bullish in Bitcoin as long as it's above about 20,000. And if you're trading Bitcoin, just remember it's very volatile. On Amazon stock, we were up 0.16% today as Amazon continues to close above this critical support zone between 97 and 98, but still finding resistance right around 100 to 102. The bull breakout will be above 102, which should easily take us up towards 115. And if we lose the support at 98 to 97, we could come back down towards the gap fill at 90. On Microsoft stock, we were up 0.31% today, and Microsoft did go up today, but it's still finding resistance right here between 274 and 275. So that's the level the bulls need to break. If we get rejected from this resistance, look for the gap fill below at 264 on a break below support at 267. And then if we continue lower, we have the gap fill at 258. The bull breakout above 274 should take us to the next target higher at 283. On Nvidia, we were up 5.43% today, and Nvidia had a very strong bounce off of the support at 213, and it's very close to fully closing the gap at 230.62. Once that gap fills, we can continue higher to the next target at 244, and you could stay bullish as long as we're above the breakout at 213 or the support trend line at 223. On Tesla stock, we were up 7.51% today on increasing volume, and we continue to squeeze the shorts out of this stock, and we did get the bull breakout. Remember, this was a critical resistance just below 208, and we did close above it, which means I think we are going to see Tesla quickly marching higher towards 225 to 230. That has been the price target, and we are getting there way faster than anybody ever dreamed imaginable. That is why you follow price action and stay bullish as long as we have this bull trend. Downside support is now going to be right around 196 to 191. And we are likely going to continue marching higher as long as we continue to see high volume buying and squeezing out the short sellers. On Apple stock, we were down 0.42%, and Apple did close back over all the moving averages and still holding above this support right around 150. So as long as Apple is holding support and consolidating in a bull flag, it is very likely just chewing up time off the clock until it gets ready for that next leg higher. The next leg higher will be the break above 156 for the price target at 163. And if we do lose the support at 150, you're looking for support at the gap fill at 146 and the top of the 200 daily moving average just below 148. On the financials, we were down 0.54% today, but the price action still over all of the moving averages, and we still have a very healthy bull trend. The industrials were down 0.27% today, with the price action still above all of the moving averages and still in the bull trend. The healthcare sector was down 0.6% today, rejecting from the resistance at 134 and still marching lower in this downtrending channel, which could take us to 130.5. The energy sector was up 0.03% today, still holding above the 20 daily moving average of support at 89, and you can stay bullish as long as we are above that support, especially for the gap fill above at 91.08. So jumping back over to the SP 500, we just had the CPI data that was apparently supposed to crash the market, and we held support, and not only did we hold support, but we couldn't even close below the 5 EMA. So stay objective and follow the price action and trend, because nobody knows what's going to happen, which is very evident because a lot of you bears continue to tell us why the market's going lower and it just continues to go higher. So stay objective and follow the price action, because that is the only thing we are trading. So I only care what the chart is telling me, and the market couldn't care less what I think, and the market couldn't care less what you think. So learn to be objective and learn to do what the chart is saying and not what you want the chart to do, because you can't force your will upon the market unless you're a big money player and you are simply a small fish swimming in a big pond. Also, don't forget I have bank trade alerts, which will send you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. I also have the Stocks Channel Discord if you're looking for a community that only trades price action and is absolutely crushing this market. You can find out how to join bank or the Stocks Channel Discord by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.